In this video, I want to talk about a strategy called a strangle. A strangle is just that. When you take something and you're strangling it, which means you're going to do a cash secured put and you're going to do a covered call on the same exact stock. But when I like to do a strangle, it's for an entry position for a certain stock. Now, this is not something that I'm going to be doing. I'm just going to demonstrate with one contract to show you how I would do it if I wanted to enter a SOFI position. Unlike my other plays where I'm trying to avoid assignment and I'm trying to avoid getting rid of my stock, in this specific case, if I get assigned, I'm not going to get too mad. And if I have to lose my shares, I'm not going to get too mad. The whole point of this is an entry position and a possible exit strategy for the underlying stock. In this specific case, it's SOFI. In general, you want to reduce your cost basis by selling a cash secured put, taking the premium from the cash secured put, reducing the amount you pay for your share price, and then sell a covered call against the same exact shares that you just bought, taking the premium that you collected for the covered call, and further reducing your cost basis, your share price that you paid for the stock. The reason why I'm choosing SOFI right now is because SOFI clicks all the categories of a company that I want to own. I personally do own it. I have an absolute shit ton of options for it, like buying options. My kids own the stock. I like the company. I like the CEO. I like that they have a cult following. It's not a company that I would mind owning. However, it's kind of had a little bit of a pullback, not much of a pullback, like just a little bit of a pullback. And I feel that there is an opportunity to get into this position if you wanted to get in using the strangle. I'm sorry for my glasses, but I have to kind of get rid of all of these lights around me. It gives me a headache. And I'm sorry for my headphones. My mic broke. I'm getting a new one. Hopefully, it's not going to be too bad with the sound. If this is something that you want to know, take a look at the screen right here. Currently, SOFI is trading at $24.74. As you can see, year to date, it's had an amazing run up and it had like this little, give back. It's not really a big deal. And I do think that SOFI is going to go a lot further than where we are right now, but it might be an opportunity for somebody, maybe like yourself, that wants to get into this play. And you're going to need just under $2,500 to do this. Right now, you would need $2,475 or 100 shares times 24.75. But let's see what we could do to reduce the cost basis. First, let's get our calculator out and let's take that 24.75, which is what you're going to be paying for the shares. The first thing you're going to have to do is buy the actual shares. So let's buy 100 shares of SOFI. Very, very simple. Buy 100 shares. 100 shares of SOFI is going to cost you $24.73. Review your order and buy. Boom. 24.76. Let's put that in. 24.76 is going to be 24.76. So that's how much we paid originally for the stock. Now let's see how much we can reduce our cost basis. Again, this is just for a better entry price when getting into a position. The whole point of this is not to get assigned, not to get rid of your shares, but to own the shares, but reduce your cost basis as much as possible, taking advantage of this recent little dip. So it had a run up all the way to like $26, and right now it has a mini dip for $24.77. So you're assuming that the price is going to run up more and you want to take advantage of it. And at the same time, if you buy the shares right now, like I just did, and you sell a cash secured put and you had to buy shares for cheaper, it's all good. You're not going to get mad at that because you want more shares of a great stock. If you have to let go of your shares at a much higher price for the covered call, you're not going to get mad at that either because you did a very beautiful cash grab over the course of the next month. However, you would definitely like to enjoy more price appreciation in the future. You could do whatever you want, but this is the way I go over these prices. Now let's take a look really fast for trading the options. Let's go to sell put, and I'm going to go 4 weeks out. This week doesn't count. So let's go 1 week, 2 weeks, 3 weeks, 4 weeks. Let's go to October 3rd. And I'm going to pick a cash secured put and I'm going to do roughly at 80% in my favor. And I'm going to go under 20 delta, 0.2 delta. And normally I would like to get 2%. In this specific case, it doesn't matter as much because all I want to do is reduce my cost basis. However, let's do the math really fast. Let's go to my toolbox. This is on my website, by the way, guys. If you guys want to use my calculator Sign up to the website, 100% money back guarantee. If you don't like it, just email me and I will return you the money. No questions asked, no explanation needed. Let's go to this play right here, which would be a 2150. So let's go to 2150 and we would collect roughly 45 cents. We would collect 0.45 cents. And for the weeks, it wouldn't be 4 weeks, it would be 4.2 or 4.4, depending if you count today or not. I'm not going to count it, so I'm going to count tomorrow only. Let's calculate. So you would still be getting your 2%, right? So this is a good cash secured put to begin with. I wouldn't want to sell a cash secured put on a stock that ran so high. However, this does meet my goals of 80% in my favor, under 0.20 delta, and getting your 2%. So then I would literally click this. Let's press continue. Let's do one contract. Now, there's going to be a range between 44 cents and 46 cents. I would like to try to get 45, try to get an extra penny if possible. Let's see if this is going to go through, and I'm going to press submit. Let's assume that this does go through and I collected my 45 cents. So now my cost basis that I paid $24.76 is actually minus 0.46. So now my cost basis instead of $24.76 is $24.30. Not bad. Let's see what else we could do to reduce our cost basis. Now, instead of selling a put, we're going to sell a call. We're going to do the same exact 4 weeks or 4.2 weeks out. And in this specific case, I'm going to go to my 93% in my favor, 0.09 or so delta. And I don't really care about the percentage that I'm getting. In this specific case, I don't really have too many options. The only option I have is this $31 strike. I would like to be a little bit higher, maybe it's $31.50, but they're not giving me that opportunity. So I'm just going to take this $31. It's not bad. Let's click on this. Let's press continue. And again, it's giving us a range of between 24 and 28. Let's try to get 0.27 cents. I'm not sure if this is going to get filled, but let's try to get it. Let's press review and press submit. Good. We collected 27 cents. Now let's do the calculator. Now let's go minus 0.27 cents. So now our cost basis went from 24.76 to 24.03. The whole point of this strategy is exactly that. We literally knocked off $0.75 off of the share price. It doesn't seem like a lot, but if you multiply this times a larger amount of money, it does add up. It's not bad. So a strangle is an ability for you to get into an entry position into a stock that kind of had a little bit of a retracement, but not much. You could do this something like with Robinhood as well, where Robinhood dropped to like $100 from 115. You could do it with Palantir. You could do it with whatever stock you want. I just happen to pick SOFI because I think it's a good opportunity to get into SOFI. Personally, I think SOFI is going to go a lot higher. But let's say you have that $31 price target. So let's go 100 divided by the share price. But remember, you didn't pay $24.76. You paid $24.03. All right. And now let's times it by $31 if we had to sell it. That's not bad, guys. Even if you had to sell it in the next 4 weeks, you made nearly 30% on your money. That's not bad. And that's kind of how you have to go about doing a strangle. Remember, I said, I'm not avoiding assignment and I'm not avoiding having to purchase the shares. I'm not avoiding having to sell the shares. Preferably, I would want to keep the shares at a $24 cost basis. I want the price to go up to $30. And then next month, I'm going to sell another covered call and another covered call and another covered call without actually losing my shares and getting full price appreciation. In addition, collecting my premium and outperforming somebody that's holding the underlying stock. I'm not saying that is going to happen. Nothing I say is financial advice, purely entertainment. I'm saying that is the goal of this specific play. This is more of an advanced technique, although it's not really difficult. It's just more of an advanced thesis, theory, technique, whatever you want to call it. But even if I had to buy more shares at 2150, I wouldn't be so mad because I'm adding to my position and I'm DCAing and I'm getting paid to wait to DCA. And even if I had to sell my shares at $31, I made 29% on the play within a month, which is not bad at all. And of course, you could always roll this and you could always do a Hail Mary. And if you guys aren't familiar with what a roll and a Hail Mary is, just click on the link up above. Guys, I want to tell you really, really fast. My website, we had our first live where we actually had live interactions. It's not just me speaking and you guys log in. If you want to join my website, click on the link down below, retiredasap.com. If for any reason you want to cancel within the first month, just email me, tumstrpltr@gmail.com. No questions asked, 100% refund. I do it all the time. If it's not for you, it's not for you. But I have a bunch of these things that I'm doing right here. So I built out 3 different calculators. These are all me coding them myself for my community. I have a bunch of stock data over here. I have my TA widget right here where you could use as part of my website. I have all of my trades, all of my dividend trackers, all of my former option buys, not just new buys. I have my demo, my tutorial, which this is going to be my Excel sheet. The next demo and tutorial that I'm doing is actually going to be a technical analysis demo tutorial. And then I have another one that I'm planning for my channel as exclusive content of, it's called a freebie play, which I'm going to talk to my community about it. And then I have my links for my next Zoom, which is going to be this coming Monday at 10 a.m. And if this is something that you like and you want to just bring your game to the next level, join me. It's not thousands of dollars. And I think it's a really, really cool community that we're growing. Thank you very, very much. If you guys want more content, please click on these videos over here. And a lot of you have been asking me about bookings. I don't have an actual live link right now for bookings, but if you want to do a booking, just email me, tumstrpltr@gmail.com, and I'll try to fit you in for an appointment. Thank you very, very much and have a blessed day.